Hi there everyone, Michael Beresford here from OpenCorp. Welcome to this edition of Property Investing Insider. As always, here with OpenCorp Group CEO, Matt Lewison. G'day Louis.
Moz.
Good to see you. Well, you'd have to be hiding under a rock to not be hearing all the media news and the commentary on a daily basis around the cost of living crisis and costs going up. Obviously, we know that the cards are stacked in the favour of investors with the fundamentals the way that they are right now. So the question I've got for you is with higher interest rates, has it become too expensive to invest in property?
I certainly think so, based on all of the media reports. And I guess the narrative that's getting played right now in the media is that interest rates, you would think, are almost at all-time highs. Not that interest rates are pretty much trending in line with their 30-year average. So in terms of interest rates overall, you'd say they're pretty much at a neutral positioning now. They neither shouldn't be inflationary or deflationary. But obviously the price of housing then comes into it. And I guess what a lot of people don't realise as well is that house prices across Australia are so variable. We have some areas where the median house price is $3 million and we've got other areas where the median house price is still only $400,000.
Yep.
And certainly for a house that's $400,000, that's reasonably affordable to most Australians now on the median wage. But I guess over the last 30 years, that variability has really grown. Like the variance between the top and the bottom has gotten much, much wider, as has the variance in the incomes between the top and the bottom end. So it's about trying to find where are the right places to invest. And there are still some pockets in Australia that are very affordable, that have much higher yields than others. And we're not talking about regional areas where you have to kind of sacrifice some of your, your criteria in order to get in at a cheap price. There's areas that are in built-up cities or major cities around Australia that have got vacancy rates at 0.5%, where rents are growing rapidly, where it's still affordable, and you can buy a property that costs you well under $100 a week to own a property. And just to put that in context, I remember in 2012, we were actually doing, when interest rates were back at this same level, when we were doing the PIAs, it was about $100 a week to buy a property in 2012. And just think the people who bought the property in 2012 were buying a property that was maybe half the price of a property today, but it was the same cost to hold. Their income was a lot lower then as well. So on a comparative basis, it was arguably more expensive for an investor to get into the market in 2012 than it is today. But that doesn't really sell newspapers.
No.
So we're not reading about that. But I think that it's not as unaffordable as people make out.
Yeah, I think you make a couple of good points. One is that most people out there don't realise that you can do it for less than $100 a week. That's the first thing. And look, as you said, there are different types of property. Not all properties, one size fits all. There's certain properties that would be super expensive and be $600 or $700 a week to hold, and then there are others that are under $100 a week, as we know. And then when I think the second point I take away from what you say is that it's really important to keep factors in consideration holistically. So interest rates don't move in isolation of a whole range of other things. Interest rates going up means, and inflation going up means that the cost of materials has got more expensive. We're just starting to hear in the media that construction volumes are well down, dramatically down.
Absolutely.
I don't think they've really caught on just how down they are, but they're well down. We're starting to hear messages about this record population growth that we're seeing in Australia. So if we took away all of the media noise around the commentary and we just said, hey Matt, you could invest in something for under $100 a week that was in massive undersupply in this country and had massive demand coming for it, then you're probably going to be saying, where can I get one?
Absolutely.
And that's really what we're looking at. I know we're redoing cash flows. You call them the PIAs. That's the name of the software for all of our listeners that aren't familiar. We're redoing those. We've had a client recently that's just refinanced because of the $120 a week rental increase that they've had. Their property's gone from cash flow positive to still cash flow positive, albeit slightly less cash flow positive. So there are a whole range of factors, and it can be a real mistake for people to hone in on one thing, whether it be inflation or interest rates. and not consider all of the flow-on effects to the wider kind of property market.
Absolutely, and I think what really comes to mind for me, there's never a perfect time to start a family. There's never a perfect time to buy your house. There's never a perfect time to start an investment property.
Yep.
So there's always a reason why you might want to put it off. And right now, the media narrative is obviously it's expensive, interest rates, obviously fear of what's happening in the construction industry. They don't really go into kind of other things that offset that. They're not looking for balance in the media. They're looking for a one-sided story that sells newspapers. And when you realise that, and you realise that it's always going to be the case, it'll be the case next year, there'll be another story, there'll be another reason why people might not invest. But the fundamentals, as you said, with massive population growth, a massive undersupply of housing. In fact, housing starts to drop. It was 4,000 per month fewer homes starting each month since the Reserve Bank started putting interest rates up. It's about 50,000 fewer homes that are going to be built in the next 12 months, while we've got record population growth for 500,000 people a year. And we've got a rental crisis. Everyone's read or seen news about the rental crisis now. 6 months ago or last year when we were talking about it, wasn't even in the media. Now it's everywhere. Politicians are talking about it. It's causing a dispute between the Greens and the Labor Party. It's that big, and it's not going to be solved overnight. In fact, I've never seen conditions like this stacked in favour of investors, where we're going to see that rental growth for years to come and house price growth. So I think it absolutely is important that you don't buy into that hype, that you really do the numbers, because there'll be properties that are unaffordable, as there always are. But there are still properties that are affordable for investors when you know where to look.
I still remember our client night over Zoom a bit over 12 months ago, and in the world famous Matt's market update, you talked about the fact that rents would be rising, and I think the question came from the audience around where will the rents go up, and you said across the board, and then proceeded to explain exactly what's unfolded over the last 12 months. So I think that's the takeaway message, folks. Yes, interest rates are up. Holding costs don't have to be proportionally up at the same time. There are ways that you can maximise your tax benefits and dramatically increase your rent. So consider the bigger picture. We think the cards are stacking up really well for investors over the course of the next 3 to 5 years, definitely. For those that get in now, because after all, everyone's going to be, jumping in when the penny drops. So jump in before the penny drops. Take advantage of that uplift. We hope you found that useful. We'll see you next time.